Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Wednesday, June 13th, and we do got a few economic news releases, some important ones today. So we're going to jump right on into it. We're going to start with the retail sales for May. And back in April, we had a negative 0.2%. So we basically had contraction on sales. We were figuring it would drop a little bit more in May. And basically, came in basically the same number, negative 0.2. So not quite as bad as they thought. But the bad side is that we had some numbers that were positive, like I think it was in April, or actually not in April, back in March, and they revised April, March to worse. So March, I believe, showed some positive signs, and actually it was negative. So they revised those numbers to a negative number, unfortunately. So we got 3 months in a row that we have now that were negative declines in when it comes to retail sales. Now, when you exclude the autos, which is volatility because of their large ticket items for May, we had a negative 3.3% for April, and we figured coming a little bit less at 0.1%, negative 0.1%, and actually it went more. So we actually had a worse day, and a lot of the investors are putting this into sales at the gasoline. Even though prices went down in gasoline, fewer people are going to the gas stations, and this is kind of what the result was for retail sales, what helped bring in more of a negative number. Another item is the producer price index. This is the wholesale level for inflationary numbers that they gauge for inflation. This is a little important, but extremely important because even though prices may go up a little bit on the wholesale level, they don't always pass it on to the consumer, and that's what we kind of look at more so, or at least we give a little bit more credibility towards. So we had a negative 0.2%, so a decrease or deflationary show in April. We figured reduce even further in May, in which we did. It actually came in negative 0.1%. So we showed a little signs of deflation there versus inflation, where inflationary numbers went backwards. So things got cheaper. So, but if you take out the volatility of food and energy, we get the core, and that one was up 0.2% in April, and we figured it'd be about the same, and it did. So essentially, we had remained the whole 0.2%. So we had some growth, and that's the number we really look at because we need to take out the volatility of food and energy. Inventories for April, we had in March up. It was up 0.3%. And basically came up to 0.4%. So inventories is good because what that shows is that they're expecting more growth, and that's why they kind of stock up. So that's actually a decent sign. So at least we got something decent out of the from retail sales and such. Now we'll head over to the headline news and take a look here. And the stock market's a little mixed today. We're getting some mixed signals. One item's big news things that they're looking at is Jamie Dimon testifies today before Congress, or not before Congress, but on Capitol Hill to the Banking Committee. As you may have heard, they're looking at implementing the Volcker rule, and they may even go a little bit more stricter rules based on, especially after Chase lost $2 billion plus. It looks like it could be now people are kind of estimating that it could be easily $4 billion due to London investments on the derivatives that they lost, and so they're kind of he's having to testify before them and trying to explain to them that more restrictions aren't necessary. So we'll kind of see. He's been, as you may have seen, he's been very vocal. So a lot of people are just kind of catching this. This has been kind of more the talk besides Europe, especially when you got the Greek elections coming up on Sunday. So we're going to jump over the bond market and see what interest rates are doing today. And as you see with the red yesterday, it declined. So we kind of started off about the same, and now we're on the increase. So rates really haven't changed a whole lot. We're up about 6 basis points right now. Sorry for this, I was having some technical difficulties on some of my other software here, so I'm using this one here today. But we are basically, it's going upwards, so rates haven't changed a whole lot, so they're a little bit better depending if they had a price decrease yesterday. If not, there might be a slightly worse, because if they priced in the morning, we were up a little bit higher, but you're talking, not much in cost. So the rate itself probably wouldn't have changed. All right, folks, you guys have a wonderful day. Stop by Mike's Daily Market Report and subscribe. See you tomorrow.